So, good morning, everyone. Uh, we are seeing positiveness in the international market. US market saw Friday closing of positive indices. Almost all the indices were up by over 1%. And also, futures of the US market are also positive. This is mainly driven by the inflation data, which came lower than or in line with expectations, and which has increased the expectation of rate cut happening in September. And also, the target now is that there could be three rate cut in the current year itself. So that has increased the probability of higher rate cuts in the current year, so which is taking up the market. Even Asian markets are receiving positive trends across the board. Most of the markets are showing positive trend. And commodity, there are some mixed reactions wherein oil has come off by around $1.5. On Friday, it is increased by that much and now back to square one. Uh, then iron ore is down by around 0.5% and steel by 1%, whereas aluminum, copper are more or less flattish. So trend in the commodities are mixed bag, but equity is showing clear up move. Uh, so overall seems we are in a positive environment, and uh, India also likely to see positive opening and then thereafter sustain that higher opening. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. Today, the market is likely to open on a gap up opening, and we're likely to witness some positive move during the day. Friday, we have seen a very good bounce back rally from 24,400 towards 24,800 levels on the closing basis, which gives very positive view on the technical front. Going ahead, we believe that the Nifty is likely to test 25,000 mark, and which will act as a first psychological resistance level. If it's break that level, then the further momentum can be seen towards 25,100 to 25,170 levels on intraday basis, whereas the support is placed at around 24,740, 24,640. The overall market view will remain a positive as long as Nifty sustains above the mentioned support levels. Coming towards the Bank Nifty, as of now, Friday, we have seen that it's managed to maintain a closing above 51,299 levels. If we look towards the daily chart, the Bank Nifty has retraced almost 61.8% of its previous rally, which we have seen from 46,700 to 5300 levels. So the strength will become more strong on the technical front on the Bank Nifty side, and we believe that this pullback rally is likely to be continued towards 51,570. Above that level, 51,870, 52,140 levels can be seen. Whereas for today intraday purpose, the support is placed at around 51,000. Below that level, 50,740 can be tested. Coming towards the Fin Nifty, 23,440, 23,570 are the crucial resistance we need to keep eye on it, whereas the support is placed at around 23,140 and 23,000. Stock specific, once we get the opening of the market and we will check the momentum of the market, and accordingly we will initiate the buy or the sell call. That's it from my end. I request derivative team to take the call forward.
Yeah, thank you, Swati. On the derivative front, see, majorly we have seen some good buying across the board. We are going to open with a gap up above the 25,000 levels, but there at the 25,000 levels, there is a huge resistance area, and that does suggest some amount of profit booking that can come in. So if you bought something in the last week or so, this will be a good level to book some profits from a near term perspective. Reason being a strong resistance on the upside. We might see some sell off or some profit booking from this level up to that 24,700, 24,600 odd odd levels going forward. So yeah, this will be a good level to book some profits. So look out for the same. Other than that, a good support area for Nifty and good base is around 24,500 to 24,700 band. So that is where you will see some buying returning in terms of Nifty. So yeah, that is the good support area. And now from the stock specific front, do expect some sectors to continue to do well, especially the oil and gas space. At this point of time, BPCL, HPCL, IOC, ONGC, they've not done much in the last 2-3 months, and they can probably witness continuation of buying which they saw in the last week. So yeah, good overall open interest additions were seen in these stocks. They can probably see more buying going forward. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. ICICI Bank result was in line with expectation. The bank posted stable quarter with NII, PBP and profits posting around 15% year-on-year growth. Credit cost was also stable at 0.4% and management is guided for full year credit cost of 0.5%. So we remain positive on ICICI. IndusInd Bank result is below expectation. Performance was slightly weak on multiple fronts, be it loan growth, which was on quarter-on-quarter basis grew by just 1%, NIM, which was flat, OPEX growth was higher than NII growth, and credit cost also came slightly elevated. So because of that, profit came 7% below estimates and was flat year-on-year as well as down 8% sequentially. Asset quality was stable. We are neutral in near term. Punjab National Bank result is above expectation. Advances growth was 5% sequentially, 14% year-on-year. Credit cost has continuously been declining. It came at just 0.5% against March quarter's 0.7 and last year 1.8. Profit came 8% above estimates. Asset quality also improved with slippage falling to 0.7% against March quarter's 1.4%. We are positive on PNB. IDFC First Bank result is marginally below expectation due to higher credit cost. NIM came down slightly by around 12 basis points and was at 6.22%. Credit cost increased from 1 to 1.5% range that we saw in last few quarters to 1.9%. Due to this, profit declined slightly both on YOY and QOQ basis. Otherwise, asset quality was stable. We are neutral on IDFC First. REC result is in line with expectation. Loan growth was 17% year-on-year. Profit before provisioning grew by 28%. However, higher credit cost led to profit growth of 16% year-on-year. Stock has run up a lot in last 1 year, but still looking at the longevity of this 17% kind of loan growth, which is likely to sustain, we are positive from long-term point of view. Shriram Finance result is in line with expectation. AUM grew 4% sequentially, 21% year-on-year. Profits were up 2% sequentially, 18% year-on-year. Asset quality was stable. We remain positive. Cholamandalam Investment and Finance result is in line with expectation. AUM grew 7% sequentially, 35% year-on-year. Credit cost came above expectation and increased from average of 1% in last 4 quarters to around 1.5% in June. Therefore, profit came around 10% lower than March quarter. Asset quality was stable. We remain positive. Equitas Small Finance Bank result is below expectation as credit cost came at 3.4% versus normal range of around 1%. This led to substantial fall in profits. On the other hand, PCR increased from 56% in March to 70% in June quarter. This happened as the bank wanted to reduce its net NPA below 1% mark so that it could then apply for the universal banking license. So in this process, net NPA has come down from 1.2% to 0.8% in last 1 quarter. Operating performance was stable. Management said that there is stress seen in MFI and CV books. That's why we are neutral in the near term. Bandhan Bank result is above expectation, mainly led by lower credit cost, which came at 1.7% against last year's 2.5% and March quarter 5.9%, so a substantial reduction in credit cost. Advances were flat quarter on quarter, but grew 24% year on year. Profit before provisioning grew by 6% sequentially, 24% year on year. Although Bandhan's performance in terms of asset quality has improved, but looking at the overall stress in the MFI sector and commentary from other banks and MFIs, we think that one should remain cautious on Bandhan Bank, and that's why we are neutral on the bank. MCX result is in line with expectation. Revenue and EBITDA both grew by 30% sequentially, and profit grew by 26%. Commodity futures and options volumes have done very well in recent months, and if this trend continues, then MCX stock will outperform from here also. So out of all the banking and NBFC results over the weekend, we think PNB result is the one which stood out and was above expectation. Thank you.
Yeah, apart from this, Ultratech has acquired India Cement promoter holding. India Cement already acquired around 22% holding in the block in June month. And now they had acquired around 32% from the 32.7% from the promoter. So overall, they will be holding around 55%, and then the open offer will be coming. The acquisition price from the promoter is around 390, whereas from the open market, which they acquired, was at around 268. And even including the open offer prices, the acquisition cost will be $115 per ton, which is we see that more of a larger capacity like 14.5 million ton will command such type of rate. Though it is at replacement cost of the plant, as such looks neutral on the acquisition cost. But if you see the performance of the India Cement is quite weak. They had done around $116 rupees EBITDA per ton. Whereas if you see the Ramco, they had done EBITDA per ton of almost around 850 rupees in the last year. So the performance-wise, India Cement is quite weak, and that is the opportunity for Ultratech to improve. Company has not yet declared any plan how they will be going ahead with the expansion of the capacity or improvement in the profitability of the India Cement. But seems like looking at the Ultratech background, they will be able to improve the performance of India Cement over a period of time. So near term, they're looking at the acquisition cost. India Cement looks fairly priced now. So upside from here is limited for India Cement, whereas in Ultratech, they got a good entry into the southern market where they were weak. And apart from that, they will be gaining on the logistic cost as the material dispatch distance will come down because of these acquisitions. And also there is enough scope for improvement of this performance of the India Cement. If you see if we assume that over a period Ultratech is able to improve the performance of the India Cement and bring it back to around 900 EBITDA per ton, then the stock is available. India Cement is now currently is at 15.6. Whereas Ultratech is trading at around 18.2 EV by EBITDA FY26. So there is some scope for valuation gain for India Cement as well. So looking at all these things, for India Cement, near term looks neutral, whereas for Ultratech, for a longer term, looks positive. Then BHEL has got one more order. Now it is of 2 into 800 megawatt power plant capacity on EPC basis. This order is over 10,000 crores, and the company has got this order from Damodar Valley Corporations. So this is positive for BHEL, that is Bharat Heavy Electronics. Apart from this, Godavari Power has also received permission for their expansion of capacity in the pellets. This is the key. Currently, right now, pellets is the key driver of the profitability for Godavari Power, and company has now got substantial expansion approvals of around 2 million ton. So the total capacity post expansion will reach to 4.7 from 2.7. So almost around 60-70% higher. And then also apart from this, this capacity will be starting in first quarter of next year. So nothing far off. So overall, this looks quite positive for Godavari Power. Godavari Power. Then Dr. Reddy came up with the numbers, and the numbers were marginally ahead of expectation, mainly driven by the US operation, which has seen 20% year-on-year growth in revenue. Apart from that, the overall revenue grew by around 14%, and EBITDA margin also came uh, in line with expectations at 27.7%. So overall result looks marginally ahead of expectations. The stock is trading at around 20 times FY25, which looks reasonable. Yeah, I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting a pullback in commodities, and one can initiate a buy in gold October contract around 68 700, and maintain a stop loss of 68 400. On upside, we are eyeing for 69 200 to 300 levels on the upside, so one can take profits around those levels. Silver buying should be initiated around 81 500 to 300. As long as it is holding 81 300, we expect a pullback till 82 700 to 83 300 on the upside. So one can buy on dips in silver, and in metals, copper, the August contract one can initiate a buy around 796 and maintain a stop loss of 791. On upside, 805, 810 is the level where profit taking is advisable. Also, zinc, one can buy around 252 with a stop loss of 250. On upside, 254, 55 is the level where one should book profits. In crude oil, we are expecting a pullback, though prices are trading in a range from 6400 to 6600. One can buy around 64 60 6450 with a stop loss of 6400. On upside 6600, one should book profits. In natural gas, one can initiate a buy around 172 with a stop loss of 165. On upside, we are expecting 187, 190 levels. So buy on dips is the strategy for natural gas. That's it from us. Thank you very much.